Evening, thank you guys. Thank you Kevin for inviting me to speak tonight. I'm just going to go through, give you a brief history of myself, how I become a trader. I don't look like a normal trader, I can hear most of you thinking. How I got into it and how I developed a system and how I trade. I've got some demonstrations on the slides of trades taken through the day. Ending up with a live trade that I took this morning. Just putting it all together. So can I just ask, have we got any day traders in here, intraday day traders? Okay, excellent. This is like a very technical presentation, so anybody else who doesn't understand it or is bored by technicals, excuse me. The system I use developed does also work on longer time frames. I mean, personally I trade in the 5-minute charts mainly, but this does work on hourly charts, 4-hourly charts and daily charts. And I'll show you some examples of those as we go through. Okay, these are the rules. Lots of writing here, but this is basically what we're looking for. Now what I discovered is, I don't know if anybody's ever heard of this before, but I discovered that when three formations occur at the same time over the three main pairs, I call them three sisters, AU, EU and GU. I also use EJ as a confirmation as well, EJ, Euro, Yen, etc. Now when three candlestick formations form at the same time, it's a very, very powerful indicator, and that is my buy or sell signal. I buy above a bullish signal or sell below a bearish signal. Obviously there's a lot of other factors that have to come in. You just can't buy every 5-minute bull candle, etc. When these setups occur after double divergence, at Fibonacci levels or support and resistance, they're very, very powerful. When they all occur together, they are extremely powerful, and 9 times out of 10 they will shoot off. You'll see this happen through the demonstration. Certain formations add strength to the trade. So, for example, we've got 3 hammers, a very strong signal. 3 hammers, 3 haramis, 3 shooting stars, etc. like that. It doesn't have to be that way. You can have a hammer on EU, a bullish engulfing on GU, and a harami on AU. All bullish, and that's a bullish signal. That's a place to buy, as long as they're at a Fibonacci level, as long as you had some double divergence or at the support. So we're looking for those indicators or those places on the chart where we're going to go. Okay, so in the morning what we'll do, we'll have a look at the excuse me, the trend for the morning session. We're not too interested in like the daily trends, etc., because we're on a 5-minute chart, so we're going to be buying corrections, selling corrections. You know, we're going to go with the money flow. As long as the setup's there, we'll be long or short. It doesn't really bother me at all. As long as there's money in it, I'll take it. So we use a 1-hour support and resistance to find out our trend for the morning, and we'll look for some tasty candles on the 1 hour, say engulfings or haramis or hammers, something like that. Okay, obviously the primary trades will be with the trend, but as I say, we will take shorts. We'll fade the trade. Trades with the trend, we'll look for 1 to 2 targets. If we're fading, we'll look at 1 to 1 target. Okay, we'll scalp out of it. What I do like to do is get my stop up to -5 as soon as possible. I don't like to give any pips back to the market at all. So if we've gone in 10 pips into profit, very quickly it happens. I'll whip that stop up. I might take some off at 10 if it's hit a Fibonacci. I might not, but I'll decide at the time. Normal targets on these are sort of 10, 15, 20, 25. That's all we're really sort of going for. Maximum is 30. What we'll do, we'll look for a swing. Say we're looking for a buy, we'll look for a swing low, somewhere to put our stop, and then our initial target will be the same as the swing low. So say it's a 10 pip stop, it will be a 10 pip initial target, and the second target will be 20 pips. So we're looking for a 1 to 2 risk reward. We'll be risking 1% of our equity on each trade. Triples or quads have at all time frames. 1 minute are a little bit hectic. You can't really sort of trade them unless you're really, really sharp. If you're watching 3 pairs, it's almost impossible. I do use the 1 minute chart for Fibonacci rejections. Sometimes I don't show up in the 5-minute charts. I'll go through that in a minute if I'm buying a 5-minute. Fib levels that work really well for EU are 61, 707, 786, 854 and 866. These work exceptionally well. Now if EU is at one of these levels and the other 2 pairs are at other levels, they don't have to be at the same. So you may have EU at 61, GU at 786 and AU at 854. That's confluence, that's synchronization, that's what we're looking for. So then we're looking for a bull signal if it's pulled back, or we're looking for a sell signal if it's rallied. Okay, we do look for Gartleys, but we wouldn't take a Gartley unless it's confirmed by double divergence. Okay, Gartleys are very strong signals, but they need to be, in my opinion, they need to be confirmed with double divergence. Of course, we're looking for these setups as well at breakouts or support and resistance, and double divergence and MACD and stock. Does anybody know what double divergence and MACD and stochastics is? I understand that you're quite a technical crowd here, so you should You understand what I'm talking about there?
Do you want to just explain that?
Yeah, sure. Double divergence. So we have classic and hidden divergence. So if price is going up, we're buying, and we have a higher high. We have MACD making a lower high, and stochastics making a lower high as well. That's double divergence. So we won't be taking any longs at this point. We'll be looking, probably not looking to short. We'll be looking for a pullback. If we're in a strong uptrend, we'll be looking for a pullback to buy in again. But it's a very good warning sign that it basically steam's run out of the money at that point. Okay, so we wouldn't be looking to buy there. If we're in a trade, we'll hold it and move the stop up, manage our trade. But it's a very, very powerful signal. I'll show that. I've got some examples of that. Okay, money management. There's lots of ways to trade. And I'm sure everyone's got their own money management. I'm, as I said before, very reluctant to give any sort of pips back to the market once it's gone 10 pips into profit. I'll give it a little bit of wiggle room, of course, once you've bought in. And there's my risk rewards down the bottom there. What I found on EU, move this stock to -5, because what price will normally do is go up 10, come back to the entry level, and then shoot back up again. Okay, so you don't want to be pipped out at entry without any sort of profit. So if it moves up to 10, move your stop up, -5, and you 9 times out of 10 you see it shoot back up, hit your target 1, blast through target 2. Okay. Obviously, all traders say losses are part of the game; they have to be accepted. The maximum drawdown I will tolerate in a day is 2%. Okay, which is very rare because, as I say, I'm moving my stop up. I'll risk 1%. I'll move my stop up to -5, which is 0.5% straight away. So I've got to lose 4 trades in a row, which is really rare to lose 2%. It does happen, but it is very rare. Okay, I've been working on this technique for quite a long time, and this first example is just an example of the yen pairs and what I was looking at. I was watching 4 screens at the time, and you can just see the confluence, the patterns, and the movement. This is before I used to use Fibonacci or double divergence. So, you know, I was having a few winners, a few losers. It's only when I put everything together that majority of the time we are having lots and lots of winners. Okay, so there's 4 pairs, 4 completely separate pairs, but as you can see, the patterns are pretty similar. Back in the day, I was using pivot for bias for the day, support and resistance, daily support and resistance obviously working out, and hand-drawn support and resistance. Now in this example, we had a quad, above the pivot, so that's a buyer, 2-to-1 risk reward, obviously shot up. This is above the pivot, 2-to-1, that was a Harami cross there, obviously there, confirming, etc. Shot up 2-to-1, I've that much more than 2-to-1. Another quad there, and there. 2-to-1, shot up, there we go. The same one here. No trade because it was below the pivot. Even though it shot up, these were my rules back in the day. It was below the pivot, so I didn't take that trade. Again, below the pivot, didn't take that trade. Missed out on a big one, but you know, you have to miss some. This one, above the pivot, Harami, quad signal, off she shoots, off she goes. More than 2-to-1 on that one. Again, above the pivot, off she goes. Below the pivot, no joy. Resistance at the pivot. Below the pivot, no joy. Above the pivot, off she goes. Okay, so as I say, I was sitting there for 2 years, 10 hours a day, 16 hours a day, just noticing that price was coming down to certain levels, and this is before I was using Fibonacci's, and before I even taught myself Fibonacci's. Okay, so just recognising the patterns there, that's how I sort of started to look for these patterns specifically. Okay, the next example was from last week, just on the 1 hour chart, just to show you an example of how powerful a quad signal can be, of all the same. What I said to you earlier on, so we've got 4 hammers or 4 shooting stars. I'm just going to show you how powerful that can be, even counter trend, I think this one was. So here we've got, on the 1 hour chart, we have a quad shooting star on EU, quad shooting star on AU, cable, and the yen over there. Now rise and support, we've got a nice target down to the rise and support here. We're going to do a 1-to-1 trade on this because it's a fade trade, it's against the trend. We've got to put our stop obviously above the wick of the shooting star. We've got a nice opportunity here on AU because support is so far down, that's a 60 pip probability with a smaller stop. Not so good and not so good. Okay, so we've got a quad shooting star here. We're not using any divergence here at the moment because we're just going to take this short down to the support. Okay, so this was a live trade. We don't take positions on all 4. We're not going to sort of quadruple our exposure. Personally, I prefer to trade EU. If EU is not moving anywhere for the day, if it's NFP day and it's just going nowhere in the morning, then I will look for the quads, preferably on AU, if not on GU, and worst way is EJ. Okay, so so here we go. This is what happened with this trade. Dropped down to support, to the pip, formed a hammer, drop down to support to the pip, formed a hammer, drop down to support to the pip, again formed a harami, drop down to the pip, formed a harami. They're all worth about 40, an average of 40 pips each. Now again, interestingly, on this setup, you've got a double hammer here on EU and EJ, and also that the corresponding candle on the other two were here. So you have a green hammer here, that's an inverted hammer, and a harami there. So these two were a buy because it was a quad signal. It's a double hammer signal. It's a very, very strong signal off of support. We're in an uptrend, as we've already established. And back then, you wouldn't have bought above these because it's not on support. Okay, so you need it to be on support, or you need some divergence for you to buy these. A couple of candles later, these did actually come down to support, and this was another quad setup here. So you could have bought above this inverted hammer and this inverted hammer if you wanted to. But we were already in this long trade over here, EU, and the results for that were obviously self-explanatory. A nice pop up from support from the hammer, 100 pips. They all developed, not as well as EU. You'll find that EU is the pair that really, really works well with this system. Okay, so as you can see, that's a quad. Both the quad signals worked. Okay, so we'll move on to the daily time frame. I'll just go through a few of these. These aren't ones that I took myself because I don't take the daily trades. It's too long. I have to wait too long for the profits. I like to get in and out on the daily, get my percentage returned, compound the interest, bang, 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 all the time. But just some interesting trades. These are the setups we're looking for. So on the 30th of October, we have the beautiful long bar. We have the harami setup. We're at 786 Fibby on EU. AU, exactly the same setup. Beautiful long bar, harami, 786 Fibby. Over on GU, we have a 618 harami. And then we have a quad signal where the red arrows are. It's a quad short signal. So you're going to go either short below there or below the rise and support, whatever you want. Now that particular signal, as you can see, dropped to over 1,000 pips. But that's taken 3 months to get there, so I'm not interested in that at all. You know, that's far too long for me to wait for 1,000 pips. Again, another buy would have been here. You have an evening star formation on the 12th of November, is that? 13th of November. On the 13th of November, again, we've got confluence and synchronization. 13th of November, we have an evening star set up on all three pairs. On these two, it's hit sinking resistance. So, of course, she drops again, she drops again, she drops again. Again, we have more setups here, more setups here. Now, AU is obviously in an uptrend here, and there's a beautiful setup there, 786 rejection, harami, inverted hammer. It would have been a quad. Obviously, wouldn't take longs here because they're still below the sinking. So there's a demonstration on how this works on the daily as well, if you haven't got time to sit in front of the screens all day, like I do, and if you just want to play the charts. I'll just, also I forgot to sort of mention that, sorry, it's marked on the charts here. So we have, this is the perfect setup basically. We have 786 Fibby, harami, and we also have double divergence on EU, double divergence on AU. Okay, so this is an example of double divergence for anybody who doesn't understand what it is. This is classic double divergence. We have price at this level with a high MACD. Price rises and we have a lower MACD. Price at this level we have a high stochastic. It rises and it's a lower stochastic. So these 2 points on the two indicators here, this is double divergence. We have a higher price, higher high, but a lower high on both the MACD and the stochastics. Now sometimes you get a singular on a MACD that's not as strong. You wouldn't be interested in that at all. Okay, we have this exactly the same setup. This is a classic divergence. Again, this is why these were so powerful, these signals. Again, we had another signal here using divergence with it. This is called hidden divergence. So we have a lower high than the previous low, but a higher MACD and a higher stochastic. So that's hidden divergence. That's always good to use in a continuing trend. So it's a pullback, and then she goes down again, and there she goes, she dropped again. We had hidden divergence here, pulled down, dropped again, and hidden divergence, double divergence over here. Okay? Okay, moving on to a day trading, 9th of January 2012. This last Monday, I just thought what I'd do is, it's easy enough to sort of go back through a chart and go, this is what happened, this is what I would have done, blah, 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 blah. Anybody can do that, obviously. I attempted to record the trades as I took them, and what I was thinking. This is on, I've got a video of one I've done this morning for you, so I was talking through it. These are ones I've done actually just taking images as I was doing it and what I was explaining, what I was thinking about, okay? So the morning setup, we're looking at the hourly. We have, this is at 6 o'clock, we've got a breakout of the sinking trend resistance. We also have, my favourite, double divergence on the hourly chart. Okay, so we're looking for longs. There was actually a trade at 6 o'clock here. I'm not sure if we took it or not. Okay, so there we go. The morning session said it's obviously quite a strong downtrend here, but we're not going to wait for a short on this. We want to sort of cash in on these moves up to a certain Fibonacci level. Okay. Now we're going to look for confirmation on the other two pairs to make sure we're on the right side of the market. Basically, we're going to be looking to buy here. So we're going to look what the other two pairs are doing on the longer time frame. And pound, we have cable. We have again still very bearish, but it's still above rising support. So that's confirmed our longs on the EU. Again, AU is very bullish, so she's popped below the 4-hour sinking, but at this time, 8:10 in the morning, she's above the sinking, the rising support. So we're looking for longs. So we're quite happy to look for longs on EU this morning. Okay, excuse the chart here, it's a bit messy. I've cleaned them up a little bit later. So there's the initial breakout there of the 1 hour. This is actually a trade, but I don't think I took it. I marked it on the chart for that one, but didn't take this one. This is our first pullback, so you can't see this too well. As I say, it clears up. The green arrow on all the charts are a quad or a triple signal, okay? So there's our signal. We've got an inverted hammer. A purple line is our entry level at 750. Obviously, take into account your spread, sorry. Your stop is below 10 pips, below the swing. Initial target is 10, second target is 20, okay? We're quite comfortable with this. Both targets hit, no problem at all. Now we look to I use various chart packages. I use MT4 because on this 5-minute chart, it's got an indicator on it that picks out your Fibonacci levels for you. Rather than sort of mark them all by hand all the time on chart, that can be quite cumbersome and tiresome. MT4 does it for you basically. Okay, so I've got one screen running MT4, one screen running, etc., etc. Okay, so we're at a possible fib level now, and here we look for confirmation on the 4 pairs. Can you see that? Okay. Yeah, we've got a 707 here, 707 here, a 618 I believe there, and a 50. Now EU is on the 50, so this is not a really strong sort of Fibonacci level. I wouldn't take a trade on that, but it is a warning sign because the other 3 are at Fibonacci levels at exactly the same time in day. Okay. It was on the 50, but it did pop up to 707. So we had a 707 triple Fibonacci divergence. So lovely. We're waiting for a pullback now because we're still buying. There's no reason to get out of buying. So price has pulled back beautifully to 707 on the 1 minute, 707 Fibonacci. That would have been a triple signal, so the others would have pulled back to another Fibonacci level, not particularly 707, but they would have all confirmed. There's our, I managed to catch one as we went in, 760 the entry. Again, only a 10 pip stop on this. First target 10 pips, second target 20 pips. Clean the chart up a little bit there for you, so I've widened the chart just so you can see this. Okay, now, this is our entry here. Now, price hasn't gone anywhere, but we're not going to get out of this because now we've got, as you see here, what I said in, can you see the hidden divergence formed? We've got beautiful hidden divergence formed here. So I'm pretty confident this trade's going to pop up now any second because divergence formed, stocks across to the top, and off she goes. Target 1, target 2. Okay? Okay, she popped up again. We were at target 2, and then we've come to a 786 triple Fibonacci level. We do have a triple signal here, but this is not a significant pullback, so we wouldn't be buying above this candle. A, it's too close to R1. B, it's not a good enough pullback to a Fibonacci level, and that candle's too big to buy above. You know, we don't want to sort of be risking about it. The stop on that's 5, 10, 15, 20, nearly 25 pips. We don't really want to be doing that, especially not on a breakout trade like that. So we've got a 706 triple on the Fibonacci levels, just confirmed by MT4, 786, sorry. And onto so now we're going to have a look at the hourly, see what's happening here. And we now have a triple hanging man. We have a doji on cable, we have a hanging man on AU and a hanging man on EU. So now the price is going to chop about a bit. So we're going to be very cautious on our trades now because this is we've taken our bit out. And we will still trade this, so we'll as we say here, cautious longs after correction because we are expecting a trend change now, or a bias change to bear to look for shorts, okay? Okay, we did actually miss this trade. On the rising support there, this was a triple here. We didn't take this trade, we missed this trade. You can't win them all. This arrow here means this hourly candle was a quad bear. So this would have been a bearish engulfing, as you can see, closed below the open, etc. Okay, so we've got to be very, very cautious now because price is starting to wiggle about. We're below the 50 MA. Okay, but we have come back to a 618. confirm with the others. We have our divergence, so this is a nice trade. I'm happy to get in this, even though we are below the 50 and we have had our hanging man. I'm happy to buy this again because we have our confirmation. We've got a 15 pip stop on this. We've got a 15 pip target, 30 pip second target. Okay, first target achieved. Okay, then we got into a bit of trouble. Price then formed a lower high, started crawling down the sinking resistance, and then we had a triple signal there. We were still in this long. Once we had this triple signal, moved our stop to +5, took a short, stop and reverse. So we're out for +5, not out for anything major. Okay, so we had a triple at sinking resistance. You see a pattern developing here, guys. It's all pretty. It's all pretty basic, not basic stuff, but you know, it's the same thing over and over again all day long. Okay, so we've had a triple. Our stop's there. Sorry, our entry's purple. Our stop's above at 10. Okay, so we're in a short. We've had our first target achieved. We've moved our stop down to 5 pips as usual. And what happened there? Oh, okay. We dropped straight through. Both targets achieved, out of the second target, and she carried on dropping. Now support, we had support at 720 at this on this one, just off the rising on the hour. So we had a 720 support. So we're going to be looking for a long here, looking for our setups again, looking for some sort of Fibonacci bounce or a double ball divergence confirmation. We have our triple off support, and we're in. So we'll have a triple candle here after a nice pullback, and we're in. Triple. Okay, this is an interesting one. We hit target 1, price pulled back to the entry level, and as I said before, -5 is kind of a magic number on this pair. She will always put, 9 times out of 10, she'll pull back to the entry, and I used to get pipped out of that. I used to always put my stop at break even at the entry, only to see it come back, take me out, and shoot off and hit the targets. So -5 is the level that I use all the time. Price shot through, hit the sinking resistance. Now there was another triple signal here, but we didn't take this. We could have added to the position here. We could have taken it. But not because the sinking resistance, it had a chance of stopping there. But we're still in our original trade, and up she pops to level 2, and we're out for 30 pips. Okay, we have a 707 and an 854 resistance triple, so the other two pairs would have been at similar Fibonacci levels. And we have our triple signal, there's our triple candle. Our entry is below there, it's quite a big one, 5, 10, 15, 20 pips. So 20 pips is our first target. Very nicely on rising support, so pretty confident we're going to hit this anyway. So once this does hit, we will move our stop down on this one quite quickly because we don't want this to bounce and come and bite us. Okay, so there's another triple signal or quad signal. Come down, price comes down, hit our target. As I say, we would have moved our stop down by now. We would have taken some of the position off. On a trade like this, we'll take some position off at a significant level, at support. You know, we don't want to give them 20 pips back. Okay. Okay, then when you had a triple on support, looks like a good, even though under the 50-50 is going down, I still will buy this. We are getting later on in the afternoon, and to be honest with you, by this time of day, I do get a little bit tired. It's very, very stressful day trading, as most of you will know. And this is starting to get a bit choppy. So I've taken my triple. Price is going nowhere. I've got stocks turning down. This is looking dangerous. We've got a shooting star on the pivot, and I'm stopped out for -10. Okay, and that's me done for the day because by this point, price is just wiggling about. There's not really enough in it to make much money. And we've had enough money for the rest of the day anyway, so you know, not complaining, not complaining at all. Okay, that's me done for the day. Okay, just running through on Tuesday. This is like I've done a week's. It's not as in depth as that one, guys. Just a week's one. So our bias is bear because it's broken rising support. There's a short there. 15 pip stop, 15 pick, 30 pick target. Boom. There she goes. It was a quad. On this one, we had a very, very nice setup on the pivot. We had a 618 Gartley. There was our triple signal there. We were in, price pullback. Nearly pipped us out there. Our original stop at -10, shot through at 618, but we're still in. There's no reason to get out. And off she rockets off. So that Gartley was a very, very nice signal, confirmed by the other pairs. Okay. That actually hit 5, 10, 15, 20, lots of pips. We had resistance at this level. We had another triple, missed this one as it went in. We had a triple, broke the rising support, as you can see. There's the triple signal, beautiful signal. And there we go. We have double divergence here, classic, very strong signal for a reversal, that is. And there we go. There she goes. She drops through target 1 achieved, 5, 10, 15, 20 pips on that. There would have been a 20 pip stop, obviously, above the swing high. Now, the reason we would have got out of this trade is we're at support. We had support drawn on another chart, but we're also at 707. 707 is a very powerful Fibonacci number for this pair. So we have our triple here. This is our triple signal. Our buy is at 775. Exactly the same setup. We'll put our stop under the swing low. Initial target 1, second target 1 to 2. Okay, first target hit, second target hit. Okay, that's me finished for the day. There's a summary of Wednesday's trade. Exactly the same setup, guys. There you see a triple. There you see the stop. There you see the first target. There you see there's a triple. There's the buy. There's the target. There's a 707 rejection. There's a breakdown. We're in with that. This one hit first target, come out. Well, that would have taken us out at 5. So a 707 rejection. We're going short. First target, second target, we're still short. Beautiful bearish conversions on the sinking resistance. We've got a quadruple there. There's our entry below on the next multiple of 5, below the rising support. We don't want this to bounce, obviously. Shot through both targets. I hope you can see some sort of pattern developing here, guys. You know, this is what I do all day long. It's not boring to me. I love it. I don't do trading for the money. It's a very nice bonus, I suppose, but I do it because I love it. I have absolute passion for this. And these are the trades, just really basic trades: 618 quadruple, 618 quadruple or triple, shooting star quadruple, 707. You know, that's how it goes all day long. When you see it like this, I used to look at these charts and think, what's going on? I was looking at these charts for 2 years, thinking there's no pattern, there's no uniform to this. This can't be cracked. It can't be cracked. It can be. Again, we're in a long, this is Thursday trades, we're in an uptrend obviously. Here we go, just buying on pullbacks. It's pretty standard stuff, what you guys must do anyway. In a bullish market, you're going to buy on dips. It's just these signals are excellent confirmations. The synchronization of the other pairs and the divergence, etc. With a beautiful 786 here. 786 in a bigger numbers means it's on a higher time frame. And the 786 from there was huge, obviously. And that's it. Okay, this is Friday's trades. Did you already trade last Friday? No? Beautiful drop on euro. This is what I spotted in the morning. This is about 8 o'clock. Now this is one of in my opinion, this is one of the strongest signals you can have. It's called a Harami cross. It is at a It's not at a fib, sorry, it's a double bear. You see the double bear formation on the stocks on here, double formation on the stocks here. This is the same time on all the 4 pairs. We have a Gartley formed on AU at a Fibonacci, I can't see that, and we have cable at 618 just about to pop through support. EU just about to pop through support, and EJ just about to pop through support as well. Now this is such a strong signal, and you'll see by the result. So we have everything we need basically. We have a Harami cross, perfect setup. We have all 4 pairs forming bearish formations, and we have our double bear divergence classic, which is very, very strong for reversal. And if anybody trades, we had a 200 pip drop on euro. We had a 140 pip drop on euro yen. We had a 100 pip drop on cable and a 100 pip drop on AU. The formation, the Gartley actually formed at 706 in the end. It did pop up above the 618 and formed at 706, but again, it was just a massive drop. So that was a great day. Fridays, I don't really trade on the 5-minute chart because it's too volatile. Your stops get whipped out, it's too whipsaw. I don't think there's enough volume in the markets on a Friday, so this is a perfect trade for a Friday. If something like this doesn't set up, then I won't trade a Friday because you lose too much money. It just whips you out all the time and then moves for you. Well, I actually started in stocks initially, but found that they didn't move enough. There wasn't enough money in it, very slow, and the gap ups, gap down. The market makers, they were nightmares basically, stopping you out. I actually started on the FTSE 1 minute because I thought I could see many more patterns developing, and I think that's what confused me for so long. It was just absolute headaches sitting there. Day after day after day. And my girlfriend actually, after a couple of years, she said to me, like, the amount of time you spent in front of these screens is about the same amount of time as a 10-year university course. You know, the hours that I spent. I was like, actually, yeah, you're right. I should have something to show for this by now. But no, I started in the 1 minute. I have traded 1 hour. I traded them all basically. 30 minutes, a very, very good signal. But again, I like to be in and out. I just like my 10, 20 pips, and I'm in and out because I like to compound it. As I say, this goes into the pot. You compound it. You're risking the 1% all the time. So that's the way I personally like to trade. A lot of people don't like to trade this way because it's too fast. It's too it's not risky, but you've got to be on the ball. You've got to see the setups. You've got to be there. You can't question yourself. When I mentor a few people, and when they come along, a lot of the time they won't pull the trigger. They'll see this setup and they'll watch it shoot off, and they'll say, "Oh, why didn't I do it? Why didn't I do it?" You have to have the confidence to see this setup. There it is. I'm in. There's my stop. I've lost that. If I've lost it, it doesn't matter. I've lost it. That's fine. That's it's part of the game. You have to take the losses. As long as you understand what the losses are, 1%, you're fine. And as I say, my personal preference is to get out at 2% loss if I take it in the day. Walk away. No point in trading no more. Okay. This keeps me busy enough. I don't really use fundamentals on a day like NFP or something like that. I will, of course. I'll be very cautious around a risk event. If I'm in a trade, I'll stay in the trade and tighten the stop up, and hopefully it goes the right way and you're in. But I will not take a trade around a risk event, hoping just to jump on the right side of it and shoot up. There's no need to. There's so many of these trades all day long. There's no need to take any risk at all like that. I had a bit of an epiphany a couple of years ago. I was sitting in front of the screens, making nice money, and realising it's quite soul destroying. And I had a chance to help a few people out, and I found that that gave me a sense of purpose. So I've been mentoring people. I started doing it free. I started doing a lot of blogs for free. Started moderating some rooms for free, and then I started charging clients because they were so demanding. And one-to-one mentoring is very, very demanding, and they want a lot of your time. And while you're trying to trade and service them as well, you do need some money for that because sometimes you miss a trade, blah, blah, blah. So my business partner, who's Efo, has been in touch with me recently, and he's set up we have set up a live trading room. I'm not here to publicise that. It's just sort of coincided with this. We're setting up a live trading room so you can see me trade live through the day. I'm the main trader on it. If any of you do want to have a look at it, you're welcome to. Email it's theforexroom.com. Email Huzefa, who does all the back office stuff, and he'll give you a free membership for a week or something because you've attended today. And you can watch me trade. You can take the trades as I take them and make yourself some money if you want, or you can compare your trading styles to mine. Brilliant. Thank you very much. Thank you.